So if you've been following my channel for a while now, you'll see that a lot of my videos have actually aged quite well. Some of the stocks, just to give some examples that we've mentioned before, like Palantir, IonQ, Rolls-Royce. If you see my stock twits, you'll also see that it's because sometimes I share my videos on there and you can see some really nice percentages since posting of the video. But anyway, one of the stocks that I mentioned way back and haven't really been talking about much lately is IAG. Unfortunately, I have sold all my positions in IAG, but we'll get to why and everything. But first of all, let's get to why the stock has actually been on the rise lately, because it has been doing quite well lately. Like from when I bought it, there was really not much action. There was like nothing going on for like a long time. Not necessarily losses. It was just like, you know, just dwindling around the baseline sort of thing. And recently it's finally been like rising. Like it looks like it's following Rolls-Royce's footsteps. And if you remember, I can't remember actually myself if I mentioned in the first video in which I talked about it, if I said that I kind of was looking at it in a similar light to Rolls-Royce. I'm pretty sure I said that. But so anyway, why did I sell IAG? We'll get to that later, but first of all, let's get to why it's been on the rise. So one is profitability and financial performance. It's had improved financial results. Of course, I would argue that it was oversold in the pandemic period. They do have really high debt though, and the pandemic only made that worse. But since the pandemic made it like the worst it's ever been, ever will be sort of thing. So obviously, since the pandemic restrictions calmed down a little bit, obviously they're making more money than before. They also announced a 350 million euro share buyback program, which boosted investor confidence. Jet fuel prices being lower, declining oil prices also added to jet fuel prices being lowered, which obviously saves them on those costs, on their operating costs. And their fuel, oil and emissions costs accounted for 29.1% of operating costs in 2023. So saving on fuel prices is like very significant. And then here is the big one, debt management, interest rates. Their debt is very significant, around 16 billion right now. The market cap is, I think, 12 billion pounds. If I could be wrong, but yeah, the debt is almost 13 billion pounds. Heathrow Airport also reduces passenger landing fees, which benefits IAG because they control 52% of the slots at the airport. So a lot of lowering operating costs in general. So their debt is like huge. So similar to how their fuel consumption is huge, so a decline in oil prices benefits them a lot. Having huge debt is also hugely benefited from lowering interest rates. And then of course the sustainable aviation initiatives, which is part of their long-term environmental goals, so they're trying to use more sustainable aviation fuel, which I guess can help boost investor confidence or encourage investors to invest into it. They also recently started their dividends program, which I just got like my first ever dividend from IAG. It's around 0.9% per year, around 2p per share at the moment, which is like it's a decent dividend. It shows that they're profitable, like their profits are healthy and like they're feeling more comfortable right now. It would encourage more investment, especially for people who are more focused on dividends. And then there's the connection between IAG and Rolls-Royce. So IAG and Rolls-Royce sort of do work together because, I mean, Rolls-Royce does provide jet engines as part of their business, and IAG would be one of their customers. That would mean that IAG doing better would be better for Rolls-Royce, more than Rolls-Royce doing better means IAG will do better. However, for example, Rolls-Royce delivery delays would impact IAG negatively, for example, as they did before. So in general, like Rolls-Royce doing better is good for IAG, and IAG doing better is good for Rolls-Royce, sort of, but it's not like such a significant impact. Rolls-Royce doing better is not significantly impacting IAG. IAG doing better would impact Rolls-Royce a little bit significantly, but not like a little bit significantly, whatever. So there are also some risks with IAG. These aren't even the reason why I sold. I'll get to that. But the risks that are to look out for are rising employee costs due to recent pay increases and possibility of future industrial actions, and the airline industry in general just being susceptible to any sort of shock like a pandemic, or if some economic problem happens, or if political tensions happen and travel from here to there gets stopped, or people stop traveling for any sort of reason, then that like can hit airlines hard like all of a sudden. And then environmental taxes and penalties could impact future profitability given like the carbon footprint. However, like if they're moving towards more greener fuels and stuff like that, I mean, I'm sure like governments will make some sort of exceptions for, you know, the country's main airline or something like that. Like people need to travel. So I mean, in general, like I was happy with the stock. I was happy like holding it, even though it does have like significant debt. I did feel like this is going to continue rising. It probably will continue rising. But the reason why I sold it is because their debt is very significant amount. It seems more than their market cap, which makes it not Sharia compliant as far as I know. So I basically sold it for religious reasons. This doesn't mean you should sell it because of my reason. I'm not like telling you to sell it or saying you should or anyone should, but it's just sort of a reminder that you don't need to put profits before your morals, whatever your morals are, or your religious reasons or something like that. If there's something that doesn't go with your beliefs or your morals, it's okay to sit it out, to not make money from it. Even if you feel like you're gonna make money, you should prioritize your values before money. Like I can invest into something else and make similar returns. I can put this money into Rolls-Royce or whatever, for example. Not that I will, because my Rolls-Royce position is getting out of hand now. But so in case you're curious about the debt thing, basically, as far as I know, for something to be Sharia compliant, the interest-bearing debt cannot be more than 33%, like a third of the value of its market cap. This is, as far as I know, I could have said something inaccurate or right or wrong, whatever, but I'm just saying that this is the basis upon which I made this decision. If you know any different information or something, like feel free to share, because in Islam interest is forbidden. You should probably check IonQ's debt to market cap thing to make sure that's okay. Sorry if the video was a bit clickbaity. It's not like any panic sell kind of thing. Their debt is getting less, although it's still like huge. It's getting like a little less, a little bit less, but I mean, to be fair, with political tensions, like you never know what could happen, and like I would generally stay away from airlines in general. I just bought, like, I just find it like very like a risky, like volatile kind of business. It's just that I just saw that at the pandemic this was like at a bottom, like rock bottom level, so it was very attractive for me to buy it, and I made a good profit and I've taken it out. I didn't actually know about this level of debt situation, or more accurately, I didn't know that it was an issue with my religion kind of thing. Anyway, there's always other stocks out there, and if you are an IAG and you're still holding, I wish you the best of luck. I'm gonna sit this one out. So anyway, that's all for this video. Don't forget to like and subscribe and share, and let us know your thoughts below, and if you want any specific video about something, let us know, and I'll see you in the next video. Bye bye.